Okay, today we're going to talk also about covered calls. And one of the things I want to do is I want to actually go through and show you guys how to research through covered calls and how to use the spreadsheet TTOS V2 that we use quite often in our labs and classes and whatnot to help us organize our thinking around covered calls. Start with a couple things. Number one, scanning. This particular list of stocks that I'm working with, we actually started with at FinViz. Let's look at all of the filters I used. I used a combination of stock and fundamental and technical filters. Okay, so we put the dividend over 2%. Dividend yield is nice when you own the stock because the dividend is going to pay you a little extra premium. Dividend yield equals the annual dividend per share divided by the stock's price. This measurement tells what percentage return a company pays out to shareholders in the form of dividends. Now, dividends usually create a little bit more stability in a company. And for a covered call trader that's looking for cash flow and consistency, that could be an attractive thing. I did the price over 10 bucks. Some people would even go higher. Some people would create a range. I kept it simple, just said over 10. Return on equity went over 15%. This measures the corporation's profitability that reveals how much profit a company generates with the money shareholders have invested, calculated as net income of shareholders' equity. I made sure that the stock was above the 200 simple day moving average, so we're not looking at stocks in a long-term downtrend. I did the average volume over 500K a day, made sure that there were options available, and that the earnings per share were growing 20% this year. So we added those filters. It gave us 28 companies. Then what I did is I went through and loaded them all up. I don't know if you guys know how to do this, but you can copy a list of symbols from, Excel. If you save it as what's called a CSV file, and then you can load it right into your Thinkorswim. Okay, that's done by doing an import watch list or to create a new watch list and then import the symbols. So I have all these symbols. I went through the charts one at a time and I picked about 10 or 12 companies that I thought were reasonable enough to look at for covered calls. And we're going to go through those right now. Home Depot has TSM, NRZ, WMC. Now, when you're trading a covered call, the idea is simple. You buy the stock, you sell a call option. Now, you can treat it as a one-off trade that you do just the one time trying to generate a profit, or you can hold the stock as a core position in your portfolio and try to sell calls over and over and over and over again. There are different mindsets to it. Some of that will be developed with your experience. Let's talk about the rules. Covered call is a combo strategy where we buy stock and sell calls. It's used to produce cash flow. It's thought of as a theta trade. We generally want to either be neutral or bullish, technically on covered calls. We call it a delta and theta strategy because you need the stock and the cash flow. Because it's a two-leg trade, you can either do the legs individually or as a combination order. Usually we're going to sell calls 1 or 2 strikes out of the money. The guideline I usually do is about 40 delta, 0.40 delta per contract. Sell 1 or 2 months at a time. Okay, for the best time decay, you're going to sell the front month expirations. If you do get into weekly options, those are more gamma sensitive. They can be a little bit trickier to manage. Some people do them, but probably not for a brand new beginner. The Vega rule. You look for volatility to drop. We're not going to get into that too much today, but usually if implied volatility is higher and you sell it and it comes down, it will benefit your position. Position size usually around 5 to 15% of portfolio allocation. Now, what I'm going to do with these today is probably put them around 10%, because what I've done here, and the idea here is I want to use my virtual account to be able to teach you guys how a portfolio might look if you get all your money to work. Got 103,000. Yeah, deal with that later. Something's freezing on me here because of that. Go away. Maybe that was the critical message. Anyway, while that's closing, just ignore it on the bottom right. HP. Don't buy an HP. It's been nothing but trouble for me. Anyway, so we're going to go through each one of these that I picked one at a time, and we're going to talk about what we're looking at. The idea in a virtual account is to simulate. You got to think about that. You know, it's virtual money. You're trying to figure out, okay, if I put my engine into the red, can I handle it? If I have my gas firmly, supplanted on top of that gas pedal and it's pedal to the metal, can I actually trade and be under control? So we're going to simulate a covered call portfolio, and we're going to pick our 8 or 9 best. And we're going to use about 10% of the account for each one. It's pretty aggressive, It's not a recommendation that you have to do it that way. I just want to take a look at what it actually would look like if we did that full bore with a $100,000 portfolio. So let's start by going through them one at a time. Let's start with Lockheed Martin. Okay, Lockheed Martin is a $205 stock. Lockheed Martin has a real good green candlestick today. In fact, it's been going up for a couple of weeks. Lockheed Martin has resistance up here, which will give you some hesitation with the chart, but we would call that a 0 or a 1. Numerically, that's what we talk about when we talk about bias. We would call that a 0 or a 1. What that means is it's either neutral or slightly bullish, depending on your opinion. Lockheed Martin pays a dividend. It's a big company. They just had earnings. Now, the earnings came in this morning, and they actually beat expectations. They were estimated at 266. They came in at 294, and the company's doing really well. Let's look at the actual money we could get if we did a covered call. This is where we fill out the spreadsheet. We're looking for this information. Now I'm going to close down the commodities report data. We don't need that up right now. Let's look at the spreadsheet. Okay, so we come up here. We find, and did I even get LMT in there? I don't know if I did. LMT right here. Okay. So the price of Lockheed Martin. Let's toggle this back and forth. Okay, so I need the price. That's 205. See it up on top right here, 205. Next thing I need is the month. Now we're going to sell August because it's 32 days out, and the rule says 1 to 2 months. So we're going to sell the 1 month options. Days till expiration is 32. The call we're going to sell is the 210. Okay, the value of that call is 1.45. The delta is 0.27, and that will give us the data that we need. This is just there to help you stay organized, okay? So if I put in 205 using the August options, we have 32 days till expiration. If we sell the 210 at a 0.27 delta, we get a credit of 145, it'll show us our ROIs. Now, there are some numbers here. We will talk about them once we gather all of the information. We'll maybe hit on a few of them as we go. You'll notice the 205 popped up in pink. That's because it's usually a higher price than what a lot of people would operate in. The standard credit ROID also is in pink. It's not very good. And that is because we didn't get very much money for the size of stock coming back. We get 2.5% from the credit alone. But we do have some potential for a maximum ROI that's a little bit higher. On that delta, it does come in at almost 12%. 145 on a $200 stock is not even 1%. So our actual credit is less than 1%. We may not trade it. Or we might. I don't know. We'll make a choice here in just a minute. WM, let's go back up to the top. Home Depot. Okay. Let's go to Home Depot. Yeah, it would be a breakout if it did go over 207. By definition, a stock that goes above resistance is breaking out. Not all breakouts are entry points, okay? Not all breakouts are created equal, but anytime a stock goes above resistance, it is by definition breaking out. Correct. All right, Home Depot. Let's take a look here. Okay, 113.68. Earnings were back here in May. Always keep an eye out for that. You got to look at that. Trade tab, we're going to use the August 32-day options. That's going to be true of all of them. We are going to sell This 41 delta. Why? Because that's the guideline I'm giving you right now, just to keep you consistent. We're going to sell the 115 strike. It's a 0.41 delta, and we're going to get 1.74 for that. Okay. Once we've gathered that information, and if you have two monitors, it makes it real helpful. I'm using the one today for class. 113.68, August. Days till expiration is 32. Calls sold is the 115.41 delta, and we got a credit of 1.74. Now, let's compare even just these first two. Okay, let's compare these first two. You'll notice that the max profit credit ROI is a little bit better in Home Depot. Okay, we're getting a little bit extra credit. Max ROI, 2.7%. That's not real great because we didn't have as much room up into the strike we sold. Standard credit ROID relative to 30 days, we're picking up about 3.5%, 3.7% on just the regular ROID. Now that stands for return on investment divided by the delta. Just a measurement we use, you know, the higher the better. Not the best returns here, okay? But Home Depot's a pretty safe, stable company that actually does pay a dividend, and it's neutral, been popping up even here today. We're going to go ahead and trade that just to simulate. So how do you do it in Thinkorswim? Well, you right-click, you buy a covered stock. Is $5,500, and I want to spend about $10K a piece. I need to do two of these. Okay, 2 contracts, 200 shares. There we are. Send that off. All right, Home Depot. Now you'll notice, and we don't need, I'll come back and get rid of that later. You'll notice the Home Depot trade now, $11,000 buying power effect over here, and it's generating about 6 theta, you know. All right, let's go to Hasbro. Let's go through this one, HAS. Good uptrend. Earnings were here. Broke out on strength. Yeah, dividend pays here. Okay. So do you play a gap? There's nothing wrong with playing a gap. It could easily fill back in though, so there is some aggression there. We'd want to dig in. During a simulation though, we're gonna be pretty aggressive. We're just gonna do this. So Hasbro is 83.43. We're going to use the August. We're going to use the 85 strike. The strike is located here. We're going to sell it for 90 cents. 90 cents is right in the middle of the 85 and 95 bid and ask. So we're going to try to get 90 cents. It's a 35 delta. So then we come over here. Hasbro 83.43. We're going to use the August. 32 days. Call sold is the 85. That's a 35 delta. Pick up a 90-cent credit, and then boom, it will calculate everything for you. We're less than 3-4% here. Those aren't great numbers, but these are more conservative companies because we are getting the dividend. It's kind of what we looked for. I'm never going to tell somebody that they're doing a bad job if they pick up 3% profit, you know, in a month. Nothing wrong with that, you know. Could we find better ROIs? Absolutely. But then we also might have to take more risk too. Okay, we're going to build this one out. Buy a covered. You know, in a virtual environment, you're much more willing to just practice. You just have to put your trade out there. I'm going to put in 202, and let's start building this portfolio out. Okay, covered stock. Going to go right all in here. We'll talk about management towards the end of this. Now we got a working order. We're just waiting on that. We'll let that go get filled. Let's go look at the charts again. Now, VLO. Valero. Earnings are coming up here pretty tight on the 30th, so this one would be a tough one to want to play. With that earnings coming up just in 10 days. Good uptrend, good breakout recently, good strong looking stock in terms of the trend here. Pays a 40-cent dividend for that size. Not a great dividend, 160. It's about, well, just about 2.5% yearly. I think. Let's go run the numbers. That's why we're doing this. Okay, 67.35, and we're going to look at the trade tab here. And the 40 delta option is here, 69. Okay, so we use the 69 strike, 40 delta. That credit is 155. All right, so then we plug it all in. Come over here and we say Valero. All right, 67.35. We're going to use August, 32 days, 69 strike, 0.40 delta, 1.55 credit. Now, this one is a lot higher potential ROI. Why? Because it has earnings coming up, okay? And it goes back to implied volatility. This is the nature of volatility. Remember how I told you volatility measures option prices? Well, the volatility on Valero is 0.32. The volatility on Home Depot, when we were looking at it, where we didn't get a great ROI, is only 0.19. Valero's going to give us a better credit because it has more risk in it. Okay? Options are more expensive, so if we sell them, we can generate the credit. If we put this position on, we would have to know earnings and be aware of it when it comes out. I don't see a lot of gapping on earnings, though. I might consider putting this on and then just simply hedging it when the earnings come out. Let's go ahead and do this one. Okay. Buy the covered stock. Now, 100 shares is 3,200. If I'm doing 10,000 a piece for this virtual account, I'll do 300 shares. That's about 10 grand right there. All right. And filled on Valero, still waiting on Hasbro. Okay. Good. Let's look at Home Depot. Wonder what fill price we got on that. All right, next, let's go look at Lamar. Okay, LAMR. There, we're filled on Hasbro. Okay. This is more of a neutral stock. I would have some concerns in the pattern that it's rolling over a little bit here. Lower highs in here. You're sitting on support. We'd call it a flat zero. Earnings seem to be a little bit more inconsistent as well, with 216 back in March. I think I'm going to skip this one. We got plenty. I'm going to just move past it. Let's go to BR. Head up here against resistance. It is neutral. You know, some people would consider it as a neutral play for a covered call. I think I'm going to go through that one as well. See if we can find something a little bit more bullish. WNR. Let's organize these alphabetically. Okay. And when is the earnings call? No, that's WRI. Let's see here. Okay, we've got a dividend coming up. Earnings are probably going to be about 3 or 4 weeks away. Early August is what I'd guess there. They're not within the next few days, next couple of weeks, so we can consider this one. We'd still need to look it up, by the way. Good breakout here, actually. You know, it's showing some strength above that resistance point. Starting to develop a little bit of a trend here. Nothing really great from a candlestick standpoint today, but let's run the numbers and see how they come out. So we go to the trade tab. We locate our option, 41 delta. Okay, August. Now this one is WNR. You got the August 49 strike for a 41 delta. We're going to be able to pick up $1.30 for it. And that's all the data I need. Let's go over here and plug it in. So we got and what was the stock price? That's probably the only other thing. 47.76. Okay, 47.76. August, 32 days. 49 strike. Call delta 41. Credit of 130. Numbers coming in okay here. You know, we can make 254 max profit from the stock and the sell of the call. From the credit alone, we're getting 2.7%. Okay. From the ROID standpoint, we're up in the 6% range. You know, we could make 13% ROID if we get the stock profit as well. See, in a covered call, you have two positions. You have stock and call. So you can make the credit from the call, but you can also make the money from the stock. So there is two different potentials. That's why we measure both. Max ROI includes the stock potential. Credit ROI is just the call itself. Okay. The best trades are when both of them independently are also very good. Let's go ahead and trade WNR. Let's buy covered stock. And if we do 100 shares, that's 2,200. We're going to do 400 shares. Get this money to work in this virtual account, because that's what virtual accounts are for, so you can simulate and practice as if you're playing a portfolio. It's not for the meek. You got to get in there and practice. Very, very important. That's how you're going to build your skill set. Okay, let's go on to the next one, BX. Uptrend, lower high, lower high, lower low. Here we are. Probably the pressure in that trend I'd be concerned about. So I'm going to skip that one, move past it. CNK. Neutral. Neutral's okay. There we got filled on WNR. Uptrend, now neutral, sitting between support and resistance. So probably neutral is something we can consider. Let's go over here and get the numbers. Now, this one is illiquid. We cannot trade it. Okay, when we see 0 and 45, 70 and 295 on the calls, there's nothing there to work with. We got to skip it. We got to move on. Next one is SBGI. Okay, these are liquid, so we can consider this one. Lower high, lower low, more bearish than bullish. I'm going to move past that. See if we can find this TSM. That's not even on my list here, so let's look at it here. Taiwan Semiconductor, long-term neutral, but we've got lower highs, lower lows. Just did come off of earnings, though, and it's trying to find some support there, curling back up. How the earnings come in? They beat their estimates, Good dividend for this size of company. Let's run the numbers on it, see how it comes out. Okay, so if we do the 40 delta, now we've got a 49 or a 23, so we're probably going to do the 49. Now, TSM is a 22.94 stock. We're going to sell the 23 strike at 49 delta for 55 cents. Now, what you're going to see here is the credit ROI is going to be a lot higher on this one because we're selling closer to at the money. 22.94 August, 32 days. We're selling 23, 49 delta for a 0.55 credit. Credit ROI, well, it actually wasn't even that much higher, 2.4%. Okay, is that okay? Well, the credit ROID is actually lower than what we'd want. That's a problem. Max ROID is cut down because of that, but in the spirit of what I've been talking about, well, let's light this one up as well, just so that we can build a portfolio to take a look at it. A big part of learning how to trade, especially when you're focused on individual strategies, is getting it down to where you've practiced long enough on that strategy to where you know it like the back of your hand. If you haven't done something 50 times, you're still by definition a rookie. Okay, even some people, it takes a lot longer than that too. So you have to, one of the very first goals you should ever have when you're working on a new strategy is to get through it quickly. Get through as many of them as you can and get your experience built up. Let's go through another one. Got two more to look at, NRZ and WMC. NRZ, smaller stocks here. Lower high, lower low, developing downtrend. Got to skip that. And then WMC is uptrend, breakout, pullback, breakout, more neutral, good dividend payer. Let's take a look here. We could run the numbers here. Let's see how they come out. 14.91 stock. We're going to sell the 15 strike. It's a 41 delta. We're going to get 25 cents for it. Okay, so WMC, we got a 14.91 stock, August, 32 days. Call sold is the 15 for a 41 delta for 25 cents. And not great either. Max profit's only 34 cents, and so then we got to think, if we can only make 34 cents profit, am I taking more than 34 cents risk? And the answer would be obviously yes, you are. Now that dividend makes it pretty attractive. They pay 60, 70 cents. You'll see these ones for that size of stock. That's pretty big dividend. Some people would play the stock just for that alone. It does create some stability and whatnot. Interesting. Well, why don't we light that one up too? Why not? We got 6 of them. Okay, buy covered stock. Now this one is $700, so let's do 14 contracts, 1,400 shares. All right. Okay. Now we're waiting on 2 fills, and now we're only waiting on 1 fill. Just send it again real quick, see if it'll fill here. All right. Now, covered call management. This is where you have to have, your orders, your stop losses, your alerts, however it is you're going to manage. Maybe in the next video, what we can do is we can go through and talk about management and how we would go through and build this. The big thing with covered calls, a couple of things you got to consider. Number one, what kind of stock are you going to trade? The more stable and safe, the lower the credit you're going to get. Okay. And then, are you going to trade stocks or ETFs? That's a big question. And then even outside of that, then you still have to figure out how to manage these credits, because just putting the trade on is not enough. See, like Hasbro, we have $180 in credit there. $362 from Home Depot, $450 from Valero, $350 from WMC, $530 from WNR. If we look at all of those, just from those 5 positions, we just generated, now let's see, 530, 880, 12, $1,300, $1,600, $1,700, about $2,000 in credits. So over the next 30 days, this $50,000 that we got to work is going to generate 4% just from the credits. Now, is 4% good money? Yes, it is. If you don't think so, then you got to go back and look at the value of compounding interest as well as consistent profits. Now, could we have gone for a more aggressive stock and gotten better credits? Yeah, sure. It's all style. You got to make your choices. Some people prefer those big, stable, fundamentally sound companies that pay dividends, because the dividend then just adds to your credit. Something to think about. All right.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.